Please go to silent, everybody, so we don't hear you typing. If you're using two machines, be sure to turn off the sound on the other one. Thanks. Good afternoon. And on behalf of everybody here at WTS Global, I'm Laura Ashton, and I'm delighted to welcome you to the latest in our series of tax-related webinars during these uncertain yet evolving times. Today, we are delighted to bring you a very relevant topic, and we appreciate very much those clients and regulators and colleagues from across Asia Pacific who are joining us on the webinar today. You're most welcome at this, the final webinar in 2020. Today, we're going to be covering tax and duty saving strategies for supply chains, and supply chains certainly one of the biggest topics emerging from this COVID period. We are, as you are probably very comfortable with by now, using Zoom. You'll notice in your personal control bar that you can adjust the view that you have, and please customize the screen to your comfort. There is a Q&A section. We are definitely leaving time for your questions at the end of this session, and would encourage you to type those questions in as we go along, and we'll endeavor to answer as many of those as possible. This webinar is being recorded, and all of you will have access to the recording afterwards, as well as a copy of the slides that we're showing today. In addition to the slides that we share, we have a complete appendix of much more detailed information by country, as well as the contact details of our partners in case you'd like to reach out for any other country-specific information. On today's webinar, we will be sharing the views of a number of our experts from around the world. We're pleased to have as our host today, Martin Ng, who's from our Shanghai office, and he will be moderating throughout the session. We're pleased to have our global CEO, Wim Weitz, who's joining us this morning from Belgium. We also have from Singapore, Eugene Lim, who's one of the founding partners of TaxIce Asia. From Pakistan, Laik Siddiq from Enfolk. Ened Du, who's a senior manager in China, based in Shanghai. Xinzhong Kang is based in Korea with Zhang and Ying. Martin, I've introduced to you already. Ranjit Mahatani, who's a partner at Dhruva in Mumbai, and Wolfram Grunhorn, managing partner of WTS Tax in Vietnam, based in Ho Chi Minh. You'll be hearing from all of these people today. Here's a quick overview of the topics we plan to cover, and there are going to be plenty of opportunities for you to add your questions. What are the major tax incentives? What are the benefits of the FTAs, and what are some of the distinctions across the region? What benefits can be offered by these free trade zones? And custom advance rulings, what is on offer? And customs valuations versus transfer pricing valuations. You'll see quite a bit of compare and contrast, and we look forward to hearing from you. But before we dive into the details, I'd like to introduce you to our global CEO, Wim Weitz, who's joining us this morning from Ghent in Belgium. Wim, over to you. Wim, you may need to unmute.
Sorry, I had a little technical problem. Good morning from Belgium, from Europe. It's my pleasure to open this webinar, a very important webinar on a complex topic. When I'm talking to clients over the last few days and weeks, it's got crystal clear that, as you all know, you are the experts in the field, that supply chains going through hiccups across the world. When I talk to clients, I hear stories that capacity is a problem. Certainly if I talk to European-based client, that prices for containers are skyrocketing in certain ports, certainly on shipping lines to Asia, to China, is the example that I quite often hear. In Europe, we have the Brexit in front of us, which will really create a huge turbulence in our market if it will be a hard Brexit. And that's what it looks like now that we are going to a hard Brexit, which means that we will treat the UK, we Europe, as a third-party country for business. So a lot of uncertainty, a lot of complexity. So I think this webinar is actually timely to address of them, a few of those certainly in the Asian market. We as WTS Global has led through the turbulent period of the last 10, 12 months, according to our 3 C's. Caring, communicating, and using a lot of creativity to make it work internally, but especially with our clients. We care, and we said we want to go through this crisis with one clear goal. We care about our people, we care about our clients, we care about our families. That's number one. We also wanted to be sure that we communicated very clearly into the market with the clients, with you, but also internally and across you. We really wanted to lead. And then we all knew that creativity was really very important, or is still very important to go through the current crisis. So those were guiding principles that helped us navigating through this complex times. And certainly in Europe, we are still going through, I would say, the darkest moments. So winter is coming. Most countries are going back into a full lockdown for the next weeks, maybe months even, up to the vaccination periods start. And that is actually the good news. Vaccines are coming, they are rolling over the markets and over the hospitals as we speak in Europe and across the world. If I just share one word on WTS Global, so we are a global tax practice established over the last 20 years, starting in Germany. Those are our roots, based out of Munich. We are connected in more than 100 countries with strong practices, independent practices, which are connected, truly connected in an integrated way across the globe. You will see that we are operating through our local brands. Many of our local firms are really strong branded firms in their country. And as a global as a global network, as a global practice, we are connecting them across the globe. So this is a quick introduction from Belgium, from Ghent. Happy to be on the webinar, keen to learn from the different countries that we have in our panel, how we can help you optimizing your supply chains from a tax point of view, but also helping you shipping across the world, and more particularly in Asia. So by this, I would like to hand it over to my colleague, partner in Shanghai, to Martin. Martin, please kick it off from a technical point of view from the office in Shanghai.
Thank you, Wim, and thank you, Laura. Hi, good morning to everyone, and good afternoon for those in China. I'm speaking out from Shanghai. I'm Martin. Perhaps I will start off by explaining a little bit the background of this webinar so that it would be easy for you to follow through in the rest coming hour. The reason why we run this webinar on duty and tax saving is in many of our projects, especially cross-border, for one way or the other, it will always involve supply chain. This is a topic we can never miss. And when it comes to supply chain, it's always about a number of countries when you sell the goods from supply to your final customers. So that will means it will become a very complicated issue, because we're not talking about getting the benefit out of one country, one single country, but multiple countries most of the time. So the topic here today is about how to achieve a better supply chain design. When we talk about supply chain design, the ultimate goal is really to achieve a cost saving, cheap and fast supply chain. So this is how we're going to present to you today. We invited our honorary panelists from 6 countries who are the tax experts in their own countries to join us today and to let us know what will be the current status of the tax and duty in their own country. So to start off, maybe I give you an overview of the 6 countries. Before this webinar, we have done a quick gathering of the information. You can see on the screen here, we've asked some questions, some key questions to the 6 countries experts. so that you can have a quick browse. Within 1 minute, you can see what are the tax incentives available from each countries. In terms of supply chain, for sure, you might have productions in one country or the other. So your interest would be to know, can I get some tax incentives, some savings out of my production process or assembly? And then you will export or you will import. Then for sure, the next question is, how can I enjoy preferential duty treatments for my import and export? And the other question is, don't forget when we talk about supply chain, it's not only about flow of goods. Sometimes there will be services going together with the flow of the goods. So would there be any special treatment on any services that you've done offshore that you think you can be exempt from a certain country's taxes? So that's how we structure our coming content. Perhaps to start with, may be interesting, I will gather your reaction first before we talk on some incentive. Which type of incentive is here on the screen? If you can have a quick click. Which of the tax incentive concern you the most in Asian countries in supply chain area? Is it production related or the import export related or offshore services related or replacement of tools or parts or the returns? Or would you involve in any temporary imports? If you can quickly show to us what will be the incentive that concerns you the most in your business across the country. And then we have a quick look at what will be the likely outcome. So you see there are 5 choices here. Just a simple click on your screen. And then we'll see whether we can see the result now. Okay, here are the results. I think most people chosen, I think that's very reasonable. Export and import, as I said, cross-border transactions are the typical characteristic of supply chain. And the second is production related. So this first question answered regarding incentive tells you the most that when you started operations, tax incentive may be the area that concerns you the most. But let's go on to ask the question, if I'm going to get my supply chain at a much more cost-effective way, can I do it really in a cost-effective way or can I get it faster? So the next question we probably will ask is, can we get some benefit from the free trade agreements? You would hear from the press nowadays, you're seeing more FTAs being signed. This is, I would say, another upgraded version of the Global Trade Pact. You probably recall not a decade ago, we have the WTO agreement, and FTA is really about the upgraded version of multinational cooperations. So we will invite some of my colleagues to talk country by country first to see what is the current status. Perhaps to start with China, Inet, can you tell us briefly what is the situation of free trade agreement in China?
Thank you, Martin. Up to now, China has signed 19 free trade agreements, original trade agreements with 26 free trade partners. Thanks to the FTAs, in the first 3 quarters of this year, ASEAN, the 10 nations of Association of Southeast Asian Nations, has become China's top 1 trading partner, with a total trade volume at $482 billion. Within ASEAN, Vietnam, Malaysia, Thailand have become top 3 in total trade volume. On November the 15th, 2020, 15 countries have concluded RCEP, the Regional Comprehensive Economic Partnership Agreement. Apart from the ASEAN nations, China, Japan, South Korea, Australia, and New Zealand have been covered in one arrangement for the very first time. RCEP expands on ASEAN Plus One FTAs between ASEAN and China, Japan, South Korea, and Australia and New Zealand. It is worth noting that the total trade volume between China and RCEP members and ASEAN has also reached more than 1,000 billion US dollars, accounting for approximately 1/3 of China's total international trade. RCEP makes high-level opening commitments through a package of measures, such as the rules of region, tariff reduction, and positive and negative lists for services. Meanwhile, China and Japan have achieved a historical breakthrough by reaching a bilateral tariff reduction arrangement for the first time in RCEP. While RCEP also promotes closer connection among China, Japan, and South Korea. So, multinational companies should grab the opportunities and consider, if possible, a more optimal supply chain model by taking RCEP into consideration. Martin.
Okay, thank you, Inet. Interesting to see China has quite a change this year with ASEAN being the number one trading partner. So when talking about ASEAN, Singapore is a country that we have to focus on because of its very special characteristic and development. Eugene, can you tell us more about the current status in Singapore about the FTA applications?
Thanks, Martin. Singapore really started the FTA movement beginning in the early 2000s, in fact, late 99, early 2000s. The whole idea behind Singapore was that Singapore wanted to promote free trade throughout the region. And since then, Singapore has signed about 20 plus free trade agreements, both on a bilateral basis as well as on a regional basis. So Singapore is a member of RCEP, which Inet mentioned a moment ago, but also ASEAN, being one of the founding members of ASEAN, was one of the first countries to sign on to the ASEAN Free Trade Agreement, and through the ASEAN regional grouping, negotiated agreements with the various 6 other countries, or the ASEAN plus 6 countries in the Asia Pacific region. Singapore also has very important bilateral free trade agreements with the US and with the EU and Japan, and most recently also with the UK. So what Singapore wants to do is to position itself such that its own products are able to enjoy duty-free entry into all its key trading partner jurisdictions. And I think what's important to note also is that beyond just tariff savings, Singapore's FTAs have been expanded to include other areas of business interest, for example, e-commerce, IP rights, competition, etc. So Singapore wants to promote what is known as WTO plus free trade agreements, where it goes just beyond goods into all these other areas of commitments. Back to you, Martin.
Hey, thank you, Eugene. Perhaps one question we may come back to you, why Singapore has so many FTA than other countries. But let's go on to another country, South Korea. This will be the country that means quite a lot to China because we buy a lot from South Korea. So Shinjun, can you tell us, explain a little bit more about the FTA application and status in South Korea?
Yes, thank you, Martin. Actually, we have 16 FTAs as of March 2020 with 56 countries. And then RCEP is a very recent FTA. And then also I think we are the biggest FTA that we have concluded so far with Korea. And as you can see on the graph, the APEC is the number one in terms of trading volume for Korea. And then ASEAN country was not that significant comparing to other countries. It's very similar to the trade with the US. But having the RCEP, we expect that there will be more trade with the ASEAN countries. And also there may be helpful for small and medium companies. We expect that especially the industry for automobile parts and machinery and textile will be one of the industry area that can be benefit from the RCEP. And also after post COVID-19, we expect that there will be more export from Korea on the medical and hygienic products.
Thank you, Shinjun. Then we move on to another country, India. Ranjit, can you tell us more about the situation in India?
Yeah, thanks, Martin. So India has 16 agreements in sort of three buckets, I would say. There's regional agreements, there's bilateral agreements, and there is also one unilateral agreement. Perhaps that's unique to India, where it's in a unilateral way giving beneficial rates to certain jurisdictions. The Indian context is that it was found exports were not as robust as the imports under these trade agreements. And because of that reason, there was a very disinclined sort of effort when the RCEP negotiations were going on, and India effectively did not participate. And the sort of position that's being taken is that the trade agreements need to be sort of more balanced and offer India a benefit in terms of what it also is able to export. And while I would say that the trade has increased with the trade agreement partners, the Indian sort of administration has made it more stringent in having what is now called the Customs Administration Rules of Origin under trade agreement rules, which is the character. This was introduced in September of 2020, which makes it far more onerous for trade in the trade agreements space. So what we've got is the importer having to have far more knowledge, having more responsibility, and also having to provide a lot more information to the customs authorities at the time of import. And similarly, the authorities, the customs officers, have been empowered with, even sort of stalling and suspending the imports under the trade agreements. So while maybe other jurisdictions find that the trade agreements are providing a lot more activity, from an Indian standpoint, it seems to be tapering in the other direction.
Thank you, Rajin. Let's look at another country, Vietnam. Wolfram, you have 1 minute. Can you tell us what is the situation of FTA in Vietnam?
Yeah, the benefits are obvious, and you can see that even in this difficult year, the trade is increasing in Vietnam. But I want to mention that it is also challenging because the conditions for issuance of the certificate of origin are not at all easy to handle, and they differentiate between the different FTAs. So a very careful management and planning of the trade and production is required. Without that, the benefits cannot be fully utilized.
Thank you, Wolfram. We have a quick run on the free trade agreement, and you heard from the experts about their own country situation. People may ask, if there's no free trade agreement, what else I can do to save duty and to avoid trade barriers? So we have another poll coming up to ask you, would you ever think about using free trade area? Free trade area by international standard, it means an area, although in your own country, but it will be outside the customs. So you don't have to pay duty and you could be relieved from tax barrier. So you see on the screen here, we have the question, how well could you understand the differences among various types of free trade zones in Asia countries? Can you tell us how confident you know how different they are? Some of them may bear different names. Do you know them well, or do you have the good knowledge, or medium, or poor? We might take a few seconds to collect your views. And then we will later invite our colleagues to explain to you what's the situation there. Okay, we can see the result now. Can you show it again? Yes. Okay, majority is medium, right? Majority is medium. I think that's quite reasonable. take China, for example, there are many different names. So why not we hear from China first, and then we hear from the other countries, how they call in each country. Inet, can you start off first?
Yes, Martin. Currently, China has 132 customs supervised zones in 6 types, respectively bounded zones, the so-called free trade zones, export for processing zones, bounded logistic parks, bounded ports, cross-border industrial zones, and comprehensive free trade zones. China plans to align all customs zones to become comprehensive bounded zones in the future. But before that, all these zones differ from each other very much in technical details. So we need to check them carefully to ensure that they can fit the supply chain model. Let me raise an example for your reference. Chinese contract manufacturers are commonly used in the supply chain model. The manufactured goods could be either sold domestically within China or exported to overseas. Before the final selling, the goods title may need to be transferred to an overseas entity, but the goods stays still in China. So if a free trade zone is adopted in the model, you may notice that the VAT refund cannot be realized until the goods are physically leaving the Chinese territory. It could either lead to a VAT refund failure if the goods are remaining in China for selling, or some disadvantages in the cash flow due to a belated refund of the VAT. But if the free trade zone is replaced by a bounded logistic park, both the problems could be solved, as the VAT refund is applicable immediately after the goods are entering into such a park. So, a slightest adjustment could mean a lot to the supply chain. A careful study on the functions, differences of the customs supervised zones is helpful for your implementation. Thank you, Martin.
Thank you, Inet. It's amazing to hear there's so many zones, free trade zones in China. What about South Korea, Xinjiang? Are they all called free trade zones in South Korea, and are they all similar or different?
Yes, basically we have 3 free trade zones, including 7 industrial complex, and 5 seaports and 1 airport. So I think I can say that basically the benefit would be similar, and then some free trade zone provide some subsidy offer in addition to the other benefit that can be provided. Basically, our free trade zone provide the tax exemption for corporate tax. For 5 years, it's 100% exempt, and next 2 years, 50% will be exempt. And that condition will be applied only for the company meet certain conditions. For example, highly advanced technology company will take the full benefit for tax exemption. And also, if they work in a free trade zone, they can also work with the outside the free trade zone without paying any custom duty. And also they can export that in a the material processed outside the free trade zone uh, without with tax free to other countries. And also they can probably have some trade for unused either machinery outside of a free trade zone without paying any custom duties. Mhm. So and also we have some in the the benefit for providing a free rent to the company located in a free trade zone. For example, uh, the factory site can be provided for free if the foreign investment amount is more than 1 million US dollar, and then if the 5 million US dollar is more for the foreign investment, then free standard factory building can be provided.
Okay,
Also,
thank you, Xinjiang.
okay.
Perhaps we will hear from another country that is coming into sight and playing a more important role, Pakistan. Like, can you tell us more about the
Thank
types of
you.
zones?
Thank you, Martin. Pakistan has proposed 37 special economic zones after the official announcement of China-Pakistan Economic Corridor. Out of these, 9 special economic zones are prioritized to be established in each province and other federal areas of Pakistan. The site selection is very critical as location, proximity of utility services, labor supply, accessibility of raw material, and proximity of special economic zone with all trading hubs matters very much for the success of special economic zone. The main objectives with Pakistan to achieve from these special economic zones are to attract foreign direct investment, to decrease unemployment, support economic reforms by developing and diversifying exports, to test new approaches to foreign direct investment and to policies related to law, land, labor, and pricing of goods. The major fiscal benefits available to the companies established in special economic zones includes one-time exemption for import duty for import of capital goods, both for the developers and for enterprises established in special economic zones. Corporate income tax holidays is offered for 10 years to these companies which are established their footmark in these zones. Markup support up to 50% on the loans taken in POC rupee is offered to the investors. Freight subsidy of 50% reduction on land transportation of plant and machinery. Tariff incentives such as subsidized rates of electricity, gas, and telephone for special economic zone companies, and one window operation facility for registration and incorporation of special economic zone companies. Thank you.
Okay, thank you, Laid. Perhaps another country people will be wondering is about Vietnam, because we've been hearing all the time that it's getting very popular for setting up a plant there. Wolfram, can you share us your view?
Yeah, I will not list the names of the zones in Vietnam because it's really very confusing. The most important is the export processing zone. If the company is located in such zone, it is free of import duties and free of VAT. The same status can be obtained outside such zones for a specific company, but that's not so easy to obtain. Within EPE zone, it is easy.
Okay, thank you, Wolfram. And Ranjin, what about the situation in India? I've been hearing that you have many free trade zones. Can you tell us more?
Yeah, it seems like we in India have the maximum number of what we call special economic zones, and there is also a sort of different type of a zone called the free trade warehousing zone, which is intended only for storage and warehousing type of functions, and these have been in existence in India for.
Ranjin, can you speak up a little bit? We cannot hear well.
Sure. So I was just mentioning that we have the free trade zones, which are warehousing zones, which is intended for the storage and warehousing purposes. And that's a sort of little bit of a variation from the regular special economic zones. And we've seen some success with the special economic zones across India, but there have been quite a few sort of challenges that have been faced, and including interpretational issues on how and what should be the customs exemptions or what should be the duty implications. But they have settled, by and large, I would say.
Thank you, Ranjin. Perhaps up till now, you've heard about what are the tax incentives available and what free trade agreement you can use and what free trade areas you can use. If you all missing that, in the worst case, you still have another opportunity that we're talking about customs advance ruling. Right? If you want your supply chain to have a higher security and a higher degree of certainty. So before that, let's do another poll. If you ever heard of customs ruling, advanced customs ruling, can you let us know ever in your career, in your experience, have you ever applied any one of them in any country in Asia? The first choice is quite often, or second, not often, or you rarely apply for them. Can you click and show your interest?
Yes, for Korea. Mm-hmm.
Right, great. We have the result now. Shin-Jong,
Okay.
we'll let you speak later. We see, surprisingly, not many cases of applications in applying for custom advanced ruling. This will be quite a strong contrast to what you're going to hear in each country. Why don't we start with China first. Inet, tell us in your actual experience, what is the status of customs advance ruling that we call CAR in short in China?
Thank you, Martin. While more enterprises are acknowledged about the concept of advanced rulings, they tend to spend some time on it, especially when they consider there are uncertainties on the evaluation, rules over region, or classification. By doing so, they may minimize the risk of future disputes or challenges from the customs authorities and facilitate a smoother custom clearance procedure. Therefore, the custom advance ruling is getting more and more popular in China currently.
Thank you, Inet. It's good to hear that it's getting quite popular in China. Perhaps I will open the floor to all the panelists here of the 6 countries: China, Singapore, India, South Korea, Pakistan, and Vietnam. One question I would put forward is, can you let us know how common is it in your country about the customs advance ruling? If you can see on the screen here, when we talk about custom advance ruling, all the countries have very similar of rules, right? Very similar when we ask about the scope, when we ask about the benefits, and we ask about when to apply and who can apply, except in the middle, you see whether it's common or not. I see 3 countries standing out. India says that it's not common. Pakistan is not common. Vietnam is common. Why not, Ranjin, tell us why it's not so common in India? I thought this is an international practice. People can ask for customs ruling.
Yeah, Martin, there seems to be no great answer for why their popularity has not really taken off in India for customs advance ruling. In about a little over a decade, we've had only about 60 rulings, and primarily these have been on exemptions and on classifications. I would like to sort of contrast this with the GST regime, which India sort of adopted in 2017. And in little over 3 years, we have 750 plus advanced rulings on the GST space. Now, I mean, that just shows that if there is something that the trade and industry would like clarity on, they go out there and seek it. And for some reason, customs has not surfaced in that popularity.
I see. What about Pakistan? Seems to me you are the youngest in this legislation because it seems that you have a new rule coming out this year about this new concept. Can you explain what is the new rule about in Pakistan?
Yeah, in Pakistan, the custom advance ruling is a new concept. It is only published in Finance Act 2020 and recently introduced in October. And the main it is covering that is classification of goods and on the rate of duty and also the applicability of notifications. And it's not more popular in Pakistan because no one know much about that is custom advance ruling.
Okay.
And
thank you. Another country we'd like to hear is Vietnam. Vietnam has been inviting a lot of people to invest and set up factories, but it looks like in terms of advanced ruling, it's something not very certain. Is that the case, Wolfram, in Vietnam?
It is developing, but until now it is not really very common, but I'm sure it will develop because in the past, the relationship to the personal local customs officer was very important, and this is declining. Everything is becoming more professional, and so also the advanced ruling will become more important.
Okay. Why don't we hear the view from another country, South Korea, because South Korea has been exporting a lot, but I'm not sure whether you import a lot. So how's the situation of advanced ruling
Yes,
in customs in Korea?
Okay, thank you, Martin. The most popular advanced ruling is for HS code application to figure out what code they have to apply. That is very common. And then on the top of that, in a customs audit is also one of the most important issue for most of our companies working in Korea, and therefore to avoid the custom audit, they are increasing in filing the advanced ruling. We call it advanced customs valuation agreement, ACVA. We call it just ACVA, and
Yes.
that is getting popular because once they have ACVA, which is very similar to advanced pricing agreement, uh, the custom valuation can be negotiated in advance with the customs office. In that case, the taxpayer can use that negotiated price to avoid any penalties. One of the benefit of having a ACVA, first of all, they can avoid the customs audit. And plus, during the customs audit, the customs office can make an adjustment for the customs value, and they can assess custom duty plus VAT. Import
Mm-hmm.
VAT will be added up at 10%. But
Okay.
in the customs audit, the tax office will not issue import VAT to the taxpayer, and
Yes.
therefore the taxpayer cannot claim the refund. However, if the ACVA is concluded, then the taxpayer made the amended tax return for the past years, they will get the import VAT invoice. That means they can get the tax refund by having an import VAT invoice issued by the customs office.
Okay, thank you, Xinjun. That's interesting to know about Korea. I see a few questions coming up. Why not we take one of them, because they all asking why we have to apply for in advance for customs ruling. Maybe Eugene can take Singapore example, although it's the same practice everywhere. Why do we have to apply in advance? But Singapore had a shorter stay, only 30 days in advance, comparing to 3 months in advance in our country. Can you take this question?
Yeah, sure. I think typically the reason why you want to apply for customs advanced ruling is to be able to get certainty before your goods are imported or exported out of your country. So the idea is that you would first engage in a discussion with the authorities to get agreement with the customs authority, typically on HS classification issues, but it could also be customs valuation, for example, in the case of Korea, or in some places also country of origin issues. But once you have that certainty, then you also have greater comfort that you won't be audited when you import and export goods on these issues where you have an agreement with customs. And that will also allow you to have greater comfort that your goods will cross the borders without any hiccups.
Thank you, Eugene. Just to add to that, you see on the table, if you get the advance ruling, it can be valid for 3 years. So that's quite a same period of validity throughout all countries, except Pakistan, you have only 1 year, the shortest. So now we touch on 4 topics already. If you recall well, let me recap quickly that for supply chain, the topic today, the objective really, the ultimate objective is to go cheap and fast, right? So to go cheap, you get all the tax incentive, you apply the FTA, or you situated in one of the free trade zone area. If not, then you apply for customs ruling to get, as Eugene said, a higher degree of certainty. But like it or not, in the worst case, you might have dispute because you want to report for customs purpose a value that very different from your transfer pricing. So now we come to a very controversial topic, topic number 5. Customs valuations versus transfer pricing valuations. Let me explain a little bit because this topic is, we're going to open this topic to all panelists to express their view. The reason why I say it's controversial because in supply chain, most of the time we're talking about related party transactions because you might purchase from third party, but in between during the process, most of the time they are related party transactions. So you have transfer pricing issue, and then you have transfer pricing valuations based on your own benchmark and policy, etc. But how are they recognized and acceptable to the customs is an issue. So I open this question to all panelists in the 6 countries. Tell us from your own country's perspective, is transfer pricing valuation acceptable to customs or it's not acceptable? Why don't we start with Singapore? Eugene, what do you think in Singapore?
Yeah, sure. Thanks, Martin. So typically in Singapore, Singapore is slightly typically in a global transfer pricing structure or in a tax structure. Singapore is slightly different from many of the Asian countries in that it tends to be an entrepreneurial entity where the residual profit sits. And therefore, and also Singapore has really very, very little customs duties. There may be some import GST issues, but typically there's not a lot of unrecoverable import taxes, with the exception of a few types of goods. Now, so from a Singapore perspective, usually the issue for the taxpayer is to be able to get certainty on the import prices of goods that are transacted through a Singapore entity in order to ensure that those values will be accepted by the customs authorities in the other countries in the region where the goods are being imported or exported from. Now, Singapore, unlike Korea, there is actually no alignment between the customs authorities and the tax authorities, i.e. customs valuation isn't automatically accepted for transfer pricing purposes. And there's no mechanism where you could get a advance ruling in order to ensure that both authorities agree on the intercompany price. But having said that, typically the interest from Singapore will be mainly transfer pricing driven. And from that perspective, I think the Inland Revenue Authorities of Singapore have recently issued new guidance on when transfer pricing adjustments will also require corresponding GST adjustments in Singapore. And so that's what we see generally. And I think from a taxpayer's perspective, as you said, Martin, the real challenge is to ensure that whatever value is used for transfer pricing purposes is also accepted for customs valuation purposes.
Thank you, Eugene. This topic, as controversial as it is, so we're going to hear more from each country. Like India, Ranjin, can you tell us, is there a conflict between the two in India?
Thanks, Martin. So the customs and transfer pricing sort of regimes in India have a formal information exchange process. It's not robust and it doesn't seem to be used very often, but it exists in sort of on paper. We have seen in customs valuation, the requirement from the customs department is that you provide the information of what is the transfer pricing policy and maybe what the transfer pricing, the prices are set. And that information is supposed to routinely be provided to the customs authorities. We will often see customs valuation taking from the transfer pricing price or the price that's set for the transfer pricing purposes. And in the same way, even when the transfer pricing team will sort of look at the prices, what's been declared in the customs side of things is looked at. But I think what does tend to happen is more often than not is both regimes will sort of say that the provisions or the rules, the methodology is typical to the very substance of that particular area, which is either customs or for transfer price, and will in a way ignore the other declaration. Sometimes, and I think this is one area where people would really have to be careful with, is that a declaration on one side, how it is treated for the other purpose, and the revenue authorities from both sides we have seen keep a hawk's eye on what has been declared for transfer pricing or customs purposes, and tend to sort of use that for the purpose of their valuation and possibly showcase the sort of taxpayer, the importer, in a sort of conflict zone.
Okay, thank you, Rajin. Perhaps one country we cannot miss to ask this question is China, because China has been stopped as the factory of the world. And I guess there will be quite a lot of issue about this area. Inet, can you tell us, is TP valuation acceptable to the Chinese customs?
In the discussion with the customs authorities, The customs can accept TP documentation for reference, but they don't necessarily need to follow the TP valuation for import valuation because the different scope and methodology. And the tax and customs information change is already in place, but still TP assessment and adjustment does not also follow the customs valuation, focus more on local profitability, profit shifting, and tax base erosion. So in this concern, it is true that sometimes the customs valuation and TP valuation cannot be consolidated very well. In this concern, frequent discussion with the customs authority and the tax authority could be necessary. Martin.
Thank you, Inet. So very quickly, we have covered so far 5 topics. Let me recap again in case you cannot remember. We talked about, to start off, what sort of incentive, tax incentive or duty incentive that you can get from a country, and what free trade area and free trade agreement you can use. And in the worst case, you ask for advanced customs ruling or even to fight for your valuations. We still have some time left for Q&A. So why not we pick up some questions from the list, and would some of the panelists address them? I see one question, very general, but is very typical. It asks, which country in the region is considered the most favorable from a customs procedure point of view? How you define favorable? I guess you probably mean the cheapest in duty, right? Zero duty, the quickest in process or customs. Let me throw that question to Eugene. Singapore has been considered very efficient. How would you take that question?
Yeah, I think Singapore probably has got the quote unquote the most favorable customs regime, only because there really isn't much of a revenue incentive for most types of goods being imported into Singapore. And typically GST, if it's a business importer, then they would typically account for GST on the outputs anyway. So the GST in any case will be collected further down the supply chain or the value chain. But I will say this, in the event that you are importing a dutiable product into Singapore, then the authorities will be quite stringent. So for example, if you're importing automobiles into Singapore, the valuation issues will be dealt with by customs very, very carefully. Same is true if you're dealing with licensable products like strategic goods and whatnot. Now, I will just make one quick point, and I'll say that in Singapore there is a process where they've introduced what is known as strategic trader status, which is sort of similar to the SAFE rules, but where they have combined it so that if a importer exporter goes through that process and comes out being scored very highly on that that process, they may be able to get corresponding corresponding import preferences when their goods are shipped to other partner countries as well. So that's something which Singapore has going for it.
Thank you, Eugene. So when it comes to the efficiency of customs, I think it varies quite a lot from country to country. But we've talked about free trade area. I would assume in this area that you will be free from the normal red tapes and formalities, because this is the area outside customs. So perhaps this is one point to consider. I see another interesting topic coming up on the list. A participant has asked, why South Korea and India do the customs advance ruling quite differently from the others? Because it's been given quite a short period of time, just before import and export. You can apply for advance ruling just before import and export. Shinjong, can you explain why there's such a short time allowed? In South Korea, comparing to China, we can apply 3 months in advance. What is the reason in South Korea? Shinjong, can you hear us? Okay, he could be away for a second. Let India answer this question as well. Ranjin, why is it so short, the time allowed for advanced ruling?
Thanks, Martin. So I think what needs to be pointed out is that while the other jurisdictions have 3 months or 30 days, whichever one it is, India doesn't have a specification. They're basically saying you can come along as and when you like us to do an advance ruling for you. The other point which needs to be highlighted is that you have to bear in mind and factor in how long they will take to provide you with the advance ruling. So as an importer and exporter, if you propose to have a transaction of import and export, and you're going to say, I will go 1 day before the transaction of actual movement, you will be left, high and dry. And I would make a sort of a third point there. The customs advance ruling in India is essentially for a proposed transaction. So they could not really tell you that you must come in a particular window or a period of time. And that's why, it's left open. You would choose as you deem correct as a party importer or a party exporter and apply for an advance ruling.
Great. So that means you are very flexible in India. Okay, I still want to insist to ask the same question to South Korea. I see Shinjun is there. Shinjun, can you hear us? Can you tell us why the time is so short allowed in South Korea for advance ruling?
I think depending on the case, the time for the advance ruling will be different. For HS code, or some of the things take about 1 month, but like as I mentioned, that for the customs valuation, it will take more than 1 year. Limited to finish the negotiation within 1 year, but it will take more than 1 year. But the effect will go for next 3 years, and it can be extended to another 3 years. So I can say that even though the simple case will take a short-term advance ruling period, but some case with the complicated issue will go for longer.
Okay, thank you, Shinjun. I think we have used up about the time. We cover quite a number of topics. I wish that those topics are inspiring to you and can create some thoughts for your further considerations. Maybe I hand back to Laura for the final comment.
With pleasure. Thank you, Martin, and thank you all of our speakers this afternoon. We appreciate everybody's participation, including the polls. As we mentioned at the beginning, we will be sending you copies of all of these slides, plus some very useful backups and contact details of all of our speakers today. We will include you on future webinars in the new year and look forward to continuing to bring the thought leadership of WTS Global in Asia Pacific to all of you. Thank you for joining us, and we wish you a wonderful end of 2020 and a great start to 2021. Thank you all. Bye-bye.
Thank you, everyone.
Thank you. Bye-bye.
Thank you.
Bye-bye.